Welcome, everyone. I'm Mike Brashazade.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journeys, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey everyone, welcome to another exciting episode of the What Matters podcast, where we delve into meaningful conversations with industry leaders. I'm Mike Brashazade, your host.
And I'm Ashley Ward.
And today we have the pleasure of speaking with Ronald Thacker, managing partner and president of Americana Partners. With over 35 years of experience in the financial industry, Ron brings a wealth of knowledge and insights to the table. Welcome, Ron.
Hello. How's everybody?
Great.
Doing great. We're super excited to have you with us today, Ron. Let's delve right in. So let's start with your journey in the world of the financial industry. Prior to Americana Partners, you had 30 years at Morgan Stanley, if I'm not mistaken, formerly as managing director and regional director for Morgan Stanley Wealth Management. Can you share with us and our listeners how your career path led you to your current role as managing partner and president at Americana Partners?
Yeah, well, you're right. I spent 30 years at Morgan Stanley. Actually, prior to that, I spent about 5 years roughly at Merrill Lynch, where I was a financial advisor. Got into the management side of things probably 4 or 5 years into my career at Morgan Stanley. And that led me to a number of different cities. And, you know, as the firm grew and as the region grew and as my role grew, began to know more and more people. Ultimately, I was running the central part of the United States. Had, roughly maybe a couple of thousand advisors that reported to me. And one of those large teams that reported to me was based in Houston, headed up by a fellow named Jason Fertitta. Jason and his team were one of the largest, if not the largest, advisor team within my region at the time. And it was roughly 5 years ago. Now, I've only been at Americana about 4 years now, but about 5 years ago, Jason and his team left Morgan Stanley to form Americana Partners. And the day that happened was a very sad day for me at Morgan Stanley, as you can imagine. And at the same time, it was probably about a year later, I left Morgan Stanley, really probably thought at the time I was going to retire. Was, at a place where I enjoyed playing golf, enjoyed spending a lot of time with my family, had spent a lot of time in the industry, and thought it might be kind of time to slow down, do some other things. And out of the blue, Jason reached out to me, asked if he could come see me, which I was more than happy for him to. We've been close and good friends the entire time he was at Morgan Stanley and even afterwards. But he came and really shared with me what they were building and what they were trying to accomplish at Americana Partners. Shared with me that they really needed somebody of my, I guess you might say, my leadership qualities and abilities to really take over a lot of the day-to-day operational functions of the firm. At the time, just being real candid, my whole life in the industry had been based in the wirehouses. So I really didn't know much about the independent side of the world. So it took me a few months talking with Jason, really beginning to understand really what the opportunity was and if I had interest in the opportunity. But the more and more I thought about it, the more I thought this would be a lot of fun, building something that, I could truly put my fingerprints on. We collectively as a team could put our fingerprints on something that we could build. We can ultimately own it. We could shape it with the kind of culture that we all dreamed of having. We could have the client service model that we had, always dreamed of having. And so roughly 4 years ago is when I joined the firm as the president. I think at the time I joined the firm, we might have had in the neighborhood of about 20 total employees. And we've had pretty considerable growth over the last 4 years, really the entire 5 years since the firm has been launched. But the 4 years that I've been here, we've seen our assets grow, our employees grow, revenues grow. It's been an exciting journey. And as much as we've enjoyed the ride up to this point, I really feel like the ride going forward is going to be even more fun than the ride we've had up to this point. So that's a little bit of background, a little bit how I got to the place where I'm at in terms of being the president of Americana Partners.
So I'd like for you to elaborate on that a little bit there. Americana When you had first got there, if you don't mind me asking, what was the current AUM that you guys had when you had gotten there 4 years ago?
Yeah, I want to say it was in the neighborhood of about 3 billion in assets, roughly, give or take, 4 years ago. And we've crossed 7.5 billion. We're bumping up close to 8 billion current levels.
Wow. Wow. Tell us about the growth there. Did you guys grow the company organically? Did you make some acquisitions along the way? That is significant growth in 4 years.
The truth, Mike, it's been really kind of a barbell or a balanced approach. We have made several acquisitions. There was an independent firm in Houston that Jason had some connectivity to. And so it was probably 3 years or so ago that we made the acquisition of that firm. It was an older fellow. He had been in the business a real long time, had a great reputation and a great clientele, but was looking for a way to exit the business. So we worked it out for him to join us and to be part of the transition as we transitioned him out of the business and his clients over to Americana Partners. We've also, roughly a little bit more than a year ago, we also had a nice acquisition with a lift-out team that was with one of the major wirehouses in Midland, Texas, and we brought them over to Americana. It was a really nice team, probably maybe the first or second largest team in all of Midland. So a very established, well-respected, well-regarded team, and we brought them over. So those have been the two acquisitions. I'd say roughly of the growth we've had, that would probably account for about $1.5 billion of the assets that we brought over the last 4 years. And the rest of it's just been organic growth. We do and continue to look for new talent. We don't hire a lot of trainees in a given year, but we might hire a trainee or two in a given year and, give them the kind of support that they need to go out and kind of harvest their contacts and their Rolodex, if you will. And so we've had some pretty good success from hiring some folks, not necessarily young in age, but young into the industry. A couple of them have had fairly established careers in other industries and just looked for an opportunity to come over and build something that effectively that they could own. So we've had some growth through that, and just our existing partners are always out, looking for large families and family office type relationships that we can bring and we can manage here organically. So that's really been kind of the approach. It's been a multifaceted approach, and we've been quite pleased with how it's gone up to this point.
And how many total advisors are at Americana now?
Yeah, I think right now we have right at 20. So we have a total of right at 50 employees, and 20 of those, roughly, give or take one or two, are financial advisors.
If you could talk to me about that, when bringing these other acquisitions underneath your umbrella, did you guys ever experience any, I would say, culture shocks to the newer individuals that you brought on? How did you align everybody?
I would tell you that whenever you bring somebody on, even if it's a perfect fit, there are always some surprises.
Right.
But I will say, what we affectionately call the dating process, leading up to the actual acquisition, you very quickly get to know the people, know what makes them tick, what their priorities are, know what their integrity is, et cetera, et cetera. And if the culture is going to be a fit or not. Now, as referenced earlier, I've been in this industry quite a long time. I have plenty yet to learn, but one of the things that I have learned in the 35 odd years that I've been here is if the culture's not right from the very beginning, you might as well just agree to be friends and part ways, because it's never going to work. And so, I would tell you that the acquisitions that we've made up to this point, one was already in the independent world. There was a prior relationship with the founder of the firm. We knew that culture was going to be a good fit. The team that joined us in Midland that I referenced earlier was a team that I had worked with and had managed previously. So I know these individuals fairly intimately. I knew that they were going to be a really great cultural fit for us as well. So it's not to say that in my career there hasn't been a time or two that you bring somebody on that culture is a bit of an issue, but fortunately at Americana so far, the folks that we brought in, the culture was predetermined was going to be in a good place, and in effect has resulted in just that. It's in a really good place. Now, the team that we brought in Midland was a team that was probably going to go independent, whether or not they joined Americana or not.
Mhm.
I think they saw considerable value in that. We had really plowed some ground previously, and had bumped our heads against the wall on a few items and learned from those. And from that experience, they would not have to do the same. So they saw a fair amount of value in joining us in this independent world versus just going completely on their own. And I think if you were to interview them, they would say that it's played out just as they thought. There's some landmines that they probably avoided by being with us. And I think that so far it's gone really well for them and for us, for that matter.
Really cool. And now let me ask you this: and those individuals from Midland, do they go under the Americana umbrella as well, or they B.B.A.
Yes.
another name? Gotcha.
No,
Really
no.
cool.
Yeah, they're pure blood Americana partners.
Really cool. And that's great to hear. I know, in making acquisitions myself, that that is something that you could run into, because people are used to or accustomed to doing things their own way. And, but how many total offices do you guys have now?
We have 4. We have our main office, which is essentially our hub office, is in Houston. I would say probably roughly half of the employees are in Houston. We have an office in the Park Cities area of Dallas, and we have an office in Austin, and that's where I'm located. And then we have our newest office, which is in Midland. And if everything goes according to schedule, we'll be opening another office in San Antonio, probably within the next 30 to 45 days.
Really cool. Are you guys looking at another acquisition there?
Yes. That's probably all I can say at this point, but the answer is yes.
Thank you for sharing. And talk to me, how have you guys been able to, you've built the company up to now, close to 8 billion. Talk to us about, how did you get the clients through the door? Was there, the new age TikTok marketing, just word of mouth? How did that come about there?
Yeah, it's probably important to answer that question that I take you back in time a little bit. And this frankly may speak to a question that you'll ask later, and I'll answer in advance. And that's really how Americana Partners was formed. Very early in the inception of Americana Partners, it was determined that we wanted to have some key clients be offered the opportunity to also be owners in the firm. Now, this was roughly a year before I got here, so in no way can I take credit for the way that the formation took place. But Jason Fertitta, again, the founder of Americana, had spoken to several of his very largest key relationships. And these are families that, especially for folks that live in the state of Texas, these are families and family names that would be very recognizable in the state of Texas, but reached out to them to say, we would like to offer you the opportunity to be owners in Americana. All of the families that we reached out to took us up on that. And so these families actually own a third of Americana Partners, and then the employees and partners own the other 2/3 of the firm. And there's several advantages that come through this. And the way to answer your question, how have we experienced so much growth? Well, these were already very well-established relationships of the firm, doing a fair amount of business with the firm. And now that they're owners of the firm, they're even more incentivized to tell their friends and family, which in the cases of these families, their friends and families are quite wealthy individuals as well. So that has been really a source of great referrals for us to continue the growth that we have. You may or may not know, every firm has sort of its key target market, if you will. And, I like to explain it like, Walmart has a great business model, and Neiman Marcus has a great business model, but their target markets are very different. It's not to say one firm is better than the other. It's just to say that they know who they are and what type of clientele they're going after.
Sure.
Americana Partners, our firm is what we would call, an ultra high net worth or a private wealth type firm. So, our average relationship is going to be in the neighborhood of around $40 million.
Oh,
We
wow.
have certainly many accounts that are smaller than that, and we have quite a number of accounts that are significantly larger than that. But typically, when we're bringing in relationships, it's pretty lumpy, it's pretty large, So that's really, there's other folks that are competing for that. It's not like we have a lock on the market. By no means would I be brash enough to say that, but I think we are slowly establishing ourselves in the state of Texas, and perhaps beyond the state of Texas, but certainly the state of Texas as a small independent firm that does have a niche for working with, very wealthy individuals. And so that's really kind of, I hope that answers your question, but that's kind of in a synopsis, how we got to where we are and how we continue to experience significant growth, because typically when we bring in a relationship, it's going to be fairly large.
Wow. So for you, you're saying 40 million is the average of the client that you guys are working with?
That roughly, yes.
Wow.
Actually, this is like, old fashioned, old dog tricks, if you will, but it really boils down to communication. When I joined Americana, they were already on a good glide path. They were going to have a lot of success whether I was here or not. There's no doubt about that. And yet, I think by me being here and just from years of understanding how important communication is, the different channels of communication, the different structures and the way that you do communicate in terms of, establishing teams, subordinates, delegation of duties, and then the follow-up of that communication, I think has been a very critical, I guess you'd say, advantage or a point that we've made and stressed going forward. I also feel very strongly that everybody has buy-in to what you're trying to accomplish. And so, not long after I got here, me and it's actually the lady that heads up our HR named Fatina Benjamin, we took on a project to really establish what our mission statement was going to be and our vision as a firm. I feel like that, any organization, whether it's the financial services industry or any industry for that matter, needs to have a mission. They need to have a vision. It needs to be stated. All of the team members, the employees need to understand and agree to what that mission is and what that vision is. And then everything needs to be measured against that mission and that vision statement. And so everything that we do, every decision that we make can draw back to say, hey, does it accomplish what we're trying to be as a firm in terms of the vision statement that we all agreed to? And so I would say that that's, it's nothing new. It's nothing new that every successful business person and leader hasn't done, but that's something that we've tried to really institutionalize and memorialize at Americana so that everybody knows who we are, what we are, where we're going, and we can all agree that we're going there. And then we can debate on how is the best way to get there, because there's different paths to get to the same place. And, that's just part of the fun of business, is trying to figure out the different paths of how to get there.
So, tell me a little bit about, your journey, or I should call it your voyage in the last, you said almost 40 years you've been in the industry now?
Correct.
Yeah.
Almost 35.
So if you could talk to me a little bit about that. We've had the markets are up 70% of the time, usually. I mean, although that's the rumor, down 30% of the time. In that 30% of the time, what was the worst time that you think that you had ever dealt with? Yeah.
There's several events that are sort of, kind of those JFK assassination events. Everybody knows where they were when that happened, type of events. I remember sitting at my desk in Dallas when the World Trade Center, bombings took place. And at the time, the firm that I was with was the largest tenant in one of the trade centers. And so I literally watched on TV as those buildings collapsed, wondering if the firm that I was with was still in existence. Now, as you may remember, the markets closed down for a few days after that. And it was certainly some very turbulent times during that. That's a pivotal key moment that I remember, and I'm sure everybody in the United States of America remembers. It just happens to be that it was even maybe a touch more personal, given that, my firm was the largest tenant in one of the buildings. The other of, I guess you'd say key event, and again, having spent most of my time at Morgan Stanley and thinking about the financial crisis that kind of weighed on us in 2008 and 2009,
Yeah.
Was the Friday before a long weekend where effectively everybody in the industry was predicting the demise of Morgan Stanley at the time, kind of speculating if we would be the next firm to go down and would not make it through the weekend. Clearly, Morgan Stanley did make it through the weekend and, thrived since then and is thriving quite nicely today. But those were some very turbulent times that I remember as well. Now, right after I got into business, I started in 1985, and I started as a financial advisor, Mike. And I started in a little town in North Texas called Wichita Falls. That's where I was born and raised, and that's where initially I started building my practice. And I remember, as a lot of folks my age remember, in 1987, we had a little bit of a crash. And that was my first sort of rude awakening that these markets really do go down, and they can go down abruptly. At the time, I was so new to the business that I really didn't have a lot of clients or a lot of assets. Certainly the ones that I had were very important to me, but I didn't have a lot of them. But I really gained a higher level of panic as I was looking around the office, and I was seeing some of these other fellows in the office that had been in the business 25, 30, 35 years that did have a lot of clients and did have a lot of assets. And, the stress that was weighing on them through the crash that we had in 87. Fortunately, and I think, history probably is good for us to use as a lesson, those markets rebounded quite nicely. It's like they say, the only person that gets hurt on a roller coaster are the ones that jump off. The people that, that stayed on the roller coaster through 87, and certainly if they stayed on and they held on till now, they've done really, really nicely. But those are the events that really come to mind most quickly in terms of just big events that I've seen over my career that might have been construed as negative. And in some cases, they turned around and ultimately were positives. As you know, we're a small firm with only roughly 50 employees. So I have the luxury, even currently, is I have a call. It's really a 10 or 15 minute call, but every month I have a call with every person that's in the firm, where it gives them an opportunity to give me, one-on-one candid feedback of what they're seeing that we're doing right, and perhaps maybe more importantly, what they're seeing that we're doing wrong. I think we do a lot of things right, but there's no doubt we do a lot of things wrong. And what I found in my history in the industry is often people are reluctant to give their feedback unless they're put in a safe position to give you that feedback. So what I've tried to do is put people in a safe environment where it's confidential, and yet I can get really good, candid feedback, and to take that feedback and then work with my team to address the issues. Now, hey, sometimes that feedback can be as benign as, hey, we don't like the brand of coffee that we got in the break room. And that may be something that, I do or don't take that particularly seriously. But if people are giving me feedback that clients are not having a good experience based on, policies or procedures that are gumming up the system, very quickly, that's going to be something that we as a team are going to address. Now, we live in an ever-changing world, and it seems like it's changing faster all the time, and technology is certainly a big part of that. I reflect back, looking at y'all in your faces, you're quite a bit younger than I am. So you may not remember the days when sitting on a financial advisor's desk was a little bunk of Ramo, and you literally could, maybe look at 2 or 3 quotes at a time, and you couldn't get news. You'd have to go to the teletype machine to grab the news. Things have changed quite dramatically since then. I think we can all agree things have changed quite dramatically. What hasn't changed, and I think to a fault, maybe some firms think it has changed, is you can't replace the personal relationship that you have with clients with a computer or with technology. You can use it to enhance that relationship. But what we have found, and certainly the types of families that we deal with, if they feel like technology is taking the place of, instead of enhancing that relationship, often they will repel from that because they're looking for somebody that really cares, that can really empathize, can really understand what they're going through. And the kind of clientele that we typically deal with, Ashley, we're not trying to make our clients rich. Our clients, for the most part, are already rich. They're really focused on, hey, we want to preserve the capital that we have. Oftentimes, they're wanting to preserve it for the next generation, the next, and in some cases, the third or fourth generation. They have that kind of wealth. But in terms of how they disperse that wealth, the way they keep, their children, their grandchildren, their great-grandchildren motivated to be, model citizens, to not just, go to the beach and live off of what, grandmother, grandfather have accumulated over the years. They're wanting us as advisors to understand those dynamics, to help them, work through those dynamics and ultimately be, a valued advisor to the family, more so than just their investments, but just as how they live and how they, go through life. Does that answer your question to a certain extent?
Absolutely.
Okay.
And to highlight on that, when you spoke about, generations, when it comes to Americana, do you guys have the next generation in place there that's going to take over, the firm in the 20, 30 years,
Absolutely.
Cool.
That kind of planning, I think, is critical, whether you're planning within a family or within a business, an industry, what have you. And in fact, I think we probably could look at 10, 15, 20 years. I think we're probably in a pretty good place in terms of, how the firm will continue on.
Really cool. Thank you for sharing.
I can't tell you that there's anything that we're doing that's particularly special or unique. The one thing that we are quite focused on is, for the most part, when I tell you what, our average account size is, but when I also talk to you about probably the average age of our clients, as you can imagine, it's going to be in the, early mid 60s, roughly would be kind of the average age. We have a great focus on building the relationships with the children of those generations and the grandchildren of those folks. So we have events on a regular basis where we reach exclusively out to those generations to educate, to help them understand about finances, about investments, and just about life in general. I mean, it's important, if you're going to inherit significant wealth, that you've had some thought process, that you've been dealing with professionals before you actually inherit it, that you know a little bit about what to do with it once you get it. So we're focused on initiatives like that, just to make sure that we have the relationship with the following generation, so we can, it's nice for Americana. We'd love to keep the assets and the revenue here, but we also want to help those individuals manage what, in some cases their grandparents and parents, acquired, over their lifetime, so that they can then be good stewards of those assets and manage them well for the generations that will follow them.
Thank you. Yeah. So if you could talk to us about, with so much going on in the economy, we've had some unprecedented events over the last several years, with interest rates and the treasuries, in some, a case of the market as well. What do you think, is the future of the economy? We've had so much go on these last couple of years. What do you foresee happening in the next 3 to 5 years out?
Well, Mike, I guess I'll do my best to answer your question, but I want to have the caveat: I am in no way a market expert. I'm an observer like anybody else, and I guess given that I've been in the industry a long time, I've been an up close observer. Another fortunate, this may be a little commercial for Americana, but another fortunate occurrence for us is right after the firm was founded, a fellow that many of us had worked with at Morgan Stanley, and prior to that, he was at Goldman Sachs. But there's a fellow named David Darst. He is our chief investment officer at Americana Partners. He was one of the top strategist investment officers at Morgan Stanley, probably for 15 years before he became that at Americana Partners, and even before that, he was a strategist at Goldman. He's written, I think at last count, 13 books. I think he's on his 7th iteration of the art of asset allocation. So when it comes to predicting markets, I'd be the first one to tell you I can't predict the markets. I'm more of a Warren Buffett type approach. Buy great quality companies with the expectation that your holding period is going to be forever. Now, we're not naive. We're at a place right now with David and the Investments Committee. We're kind of in a cautious mode. I do think we're looking for the next move in interest rates will be down. If you put a gun to our head, we'll probably predict that there's going to be 2, maybe 3 rate cuts within this cycle. I think you'd be hard pressed to find periods of time when the Fed's lowering interest rates, that the markets aren't at the worst neutral, at the best, quite positive. And if interest rates are coming down, that certainly is robust for the economy. I would be one that just from maybe again from an observational standpoint, given the national debt, I don't know how high we can allow interest rates to go anyway, without that becoming just an unbearable burden on behalf of our country. But that to say, I wouldn't have a clue what the markets are going to be 6 months or a year from now. But I bet you a lot of money 5 years from now, the markets will be higher than they are today.
I like that answer. And I have a last question here. What do you view as for the future of Americana? As you had said, that you guys already have, the next generation in place. You guys have grown the company to close to $8 billion. Where do you see Americana in 3 to 5 years from now?
It's hard when you start thinking about the future and how you want to measure what the future looks like. It's hard not to put quantitative values on that in terms of just assets or maybe numbers of employees. And I'm more than happy to do that. I'd be quite disappointed if 5 years from now, our assets aren't triple or quadruple of what they are today. I'd be quite disappointed if our number of employees aren't, 2 or 3 times what they are today. But what I hope 5 years from now is that I hope we have positioned ourselves to even be better stewards of our clients' assets. I hope that 5 years from now that we have even deeper and closer relationships with our clients, so that we can help them, navigate what undoubtedly will be some smooth and rough waters, over the coming years. I think we're very cautiously optimistic that our growth ahead of us will be even faster than the growth that's occurred up to this time, even though by most measures our growth over the last 5 years has been, fairly significant. But with the types of, I'm part of my role is to understand what's in the pipeline and what we have working. I think over the next, several years, you're going to see some pretty significant growth in assets and revenue in Americana. I would also predict that we'll probably branch outside of the state of Texas. We would love to have a footprint. I don't think we could be optimistic to think we're going to have a footprint across the entire United States in every state, certainly not within my lifetime. But I'd be real disappointed if in the next 5 years we don't have, several other states that we have at least some level of footprint where we're using the resources that we have in Americana to really service, the high-end part of our market in a more meaningful way.
Thank you. I appreciate that. I appreciate your answers there.